Okay, what's good? What's good? So, really quick, I want to just go over some more candlestick anatomy and kind of break down how and why I mark up the charts the way I do. And it's super simple. So, if you know candlestick anatomy, we're going to break it down really quick. Essentially, when you have a candle, right? This is a candlestick. This is a candlestick, right? Each one of these are candlesticks on the monthly time frame, right? So each candle is 1 month. Okay, we have each candle has a low, which is that wick right there, and we also have a high, which is this wick up here, right? So every candle has a low point down there and a high point, which is the very tip of the wick. And then each candle also has an open and a close, which is for a bullish candle. In this case, you can't tell if these candles are bullish or bearish, right? I just made it very black and white. I'm really focusing on the structure being broken or swept. Keeps it real simple. But essentially, I would say the highs and lows are the most important. But every candle does have an open and a close. So let's say this was a bearish candle right here. The open would be at the top and the close would be at the bottom, right? Because the candle is moving down. So if the previous candle closed here, right? If we close this candle here, the next candle has to open at the same level, right? So if this was an extreme sell-off candle, very obvious, right? Price sold off from this candle here, right? We sold off, and you see how price opened or closed at this level, and then we opened at the same level. Opened here, and then sold off, closed. Right, closed here, came to the next candle, opened. Right, we came up, made the high, came back down to the open, sold off, came all the way down to the low, and then finally closing at this level. There's 20 days left on this candle, not officially closed yet, but if it was, close right there. And the next candle would have to open right next to it. Same level. So that's candlestick anatomy, right? And when I look at charts, anytime I open up a chart, of course you want to determine the overall direction, and this has been bullish since day one. Okay, and I like to mark up structure that's been broken because that's important. If the market wants to continue moving in an upward direction, we have to break structure to the upside, right? Uptrend, right? We have a high, a low, a higher high, and a higher low. Legally, on paper, you cannot break structure, but you cannot make a higher high without breaking structure. Legally, right? We have a high, you mark it up. So I put the horizontal ray on the wick of the high of the structure that I would like to see broken in order for us to continue in an uptrend. So in order for price to continue bullish behavior or momentum or whatever you want to call it, we have to break this structure, right? We have to break these highs with a full body candle. That is the only way to create an uptrend. If you know any other ways, please drop them in the comments. Please, wrong answers only. But let's go to the 12-month time frame. Each candlestick represents 1 year. Again, you have the low, the high, the open at the bottom because the previous candle closed here. We opened the next candle, same level, boom, close up there. Opened here, sold off to the low, and now we're here. Okay, so I'm marking up structure, and if you zoom out and start from the beginning, you see that we broke structure as price moved up. All right, let me get rid of this real quick so I can zoom in. But we started off right here, and in order for us to continue, going higher, what do? We have to break structure. So I mark up the high of the candle, right? So we broke structure, full body candle, retest, right? Price comes back to retest multiple times. It took, after the break of structure, it took 1, 2, 3, 4, 5 years of retesting before price took off. And if you mark up the lows, that's also important, because you don't want price to close with a full body candle beneath the lows if this is truly bullishness, right? That's important. Okay. So that's your stop loss. You see that price even swept the lows. So people had their stop losses right there. Price came right beneath that, took all that money, and then took off. Never came back again, right? And the reason why it's important to understand and mark up the breaks of structure or the sweeps of liquidity or the highs and lows is because that is Wyckoff, right? What is Wyckoff? I go over it in a lot of videos, but Wyckoff essentially is some type of liquidity being built up, right? Lows and highs, right? Lows and highs in the market over a range, maybe going a little bit higher, maybe a little bit lower, just in there, just playing around, not really making major breaks of structure on higher time frames, just kind of lounging around. And then all of a sudden, right, before we get to the all of a sudden, this is step 1, right? And then all of a sudden, the banks and institutions come in, the people with the real money to move the market. They come in, and if you're looking at buys, right, imagine this is down there, okay, on smaller time frames. This is what's happening internally down there, right? And all of a sudden, the banks come in, the people with the real money to make it happen, they drop the market tremendously, causing everyone to think the market is crashing, shit's going crazy. And they take out all these people's stop losses, making people have fear and doubt in the markets. They start selling at a loss, right? No longer in profit. And then the banks are like, oh, my fault. My fault, big dog. We meant to go this way. I'm kind of new around here. And they push that thing right back up, breaking above all these highs, right? So anyone who is selling, they're like, yeah, we're in profit. Yeah, we dropped the market. And then boom, they get clapped. And like, whoa, I thought the market was dropping. And then they said, sure. They said, sure. You thought. So everyone got cooked. The buyers here got cooked. The sellers up here got cooked, right? And once you get that break of structure, remember that break of structure that I was talking about? So again, step 1 right here. Build up of liquidity, highs and lows, a range, some wicks, whatever you want to call it. And then we get the sweep. Step 2. Step 3 is the break of structure, right? And then step 4 is the retest. When price comes down to retest that structure that we just broke, confirming bullish behavior, right? Since we broke structure to the upside, now we have that higher high, right? That's step 3. Step 4 is the retest or the higher low that we want. Boom. That is your accumulation. This is what we look for in the market for buys. And then it's the direct opposite for sells, right? But since this is uptrending since before we were born, I'm going to continue to look for the buys, right? But if I zoom in right here, I guarantee you will see some sort of similar image as this in here, right? Because again, we cannot break structure, right? We cannot break structure without first doing this right here. We cannot break. We can't just skip to step 3. You got to do step 1 and step 2 first. So we're going to dive deep right here, and we're going to see this. You're going to see that. And the reason why it's so important is because if you can identify a break of structure, you've essentially identified Wyckoff, right? If you can identify step 3, you have essentially identified the previous steps, which is Wyckoff accumulation, right? That's the whole point of this video. I just wanted to really like break it down and like just share with you guys more insights. Hope maybe that helped you understand it more. Maybe not. I'm assuming this is the high right there, but it's here. You can definitely, I see it now, right? We have some type of low. We have a high, right? We sweep. So that's step 1. It can be 1 wick, right? It can be, this is a range of wicks, but I marked up essentially the lowest point, and then to the right of that, the highest point there. And then step 2 is the sweep of liquidity. Step 4 is that break of structure, right? And then step 4, or that's step 3, and then step 4 is the retest. Boom. That's essentially Wyckoff. And this is on the monthly. And again, you can even go dive deeper, right? That's the break of structure. Broke structure, came back to retest, gone. You can even mark up more structure in here. Right, we broke structure to the upside, retested, gone, came all the way back, still respecting this structure, right? Could have marked up these lows, and then price flew. Eventually came back even lower. That's fine, right? This whole area was valid, and there was even more evidence here, right? More structure that we broke. Tried to break it a few times, couldn't quite do it, finally did. Never got the retest. But again, this is the monthly time frame. The deeper you dive, the more you'll see. You'll see the same thing that we just marked up over and over and over as you dive deeper. So that's what's happening. I guess I'll go over what happened today or recently. I didn't want to make this a long video, but fuck it, we're here. But yeah, going back to what I was talking about, let's go to the 12-month, 1 year time frame. I'm marking up some structure. Right now, you guys should be able to understand what I'm doing. I'm not going to explain too much. Right, we have high, we broke structure, full body candle. Even though it barely did, that still counts. Right, the body of the candle closed above a previous high. That's a break of structure. So we can assume step 1 and 2 already happened. Step 3 is the break of structure, right? Step 4 is the retest. And you got 2 chances. 2. Let's go to the monthly. The first time was here, right? Again, you see it clear. A break of structure, right? Retest. Boom, right? Retest there. Back in 2024, in January. And then retest again, 2025, April. Interesting. So you had a year of price, a little bit over a year of price just cruising. Comes all the way back down to retest the same area. Bet. And you can mark up even more breaks of structure. You can mark up this break of structure there. You can mark up the next one and just continue. If price is going to continue bullish, you can just keep marking up each structure and seeing how price reacts at each one. See how you got chances to take retests, things of that nature. And then these lows of this candle were never violated, right? We also came, if you put this here, we broke this structure right in there, right? Came back for a little bit of a retest, boom, boom, boom. And then recently, we came even deeper. We came deeper, We came to even sweep liquidity at these lows. We swept this liquidity as well. Didn't sweep this though, right? But we came pretty deep. Came pretty deep. So let's go down to the weekly. I want this to show for now. Let's see. Boom. Let's go to the weekly. Okay, we're looking at this more close, like how price came into these weekly zones, still respecting structure. If I would have had this liquidity marked up right there, right, these lows, swept that, could have used that as an entry. Again, these lows were protected still, right, respected, solid. Let's go down to the daily. You see more and more. You could have even came into there. Or you had these lows that were swept. You could have even marked up more structure that was broken here or here or here. You know, it's all important. Boom. But we broke structure essentially to the upside. I think we got the retest here. Yeah. So yeah, this is the swing high. You could have marked up all these as well. Could have got some lower time frame entries. But yeah, overall, the swing high broke above. Beautiful retest. And then zoom into the future. Nice entries. You know, you had like 600 points, 700 points, let's say even 1,000 points of drawdown. But, you know, price went 2,000. That's a nice 1 to 2. So under leverage, wait for your confirmations. So let's say price is here and you're like, oh, well, we're in the zone. I don't want to have that much drawdown. Well, that's when you go to the smaller time frames and look for the same accumulation. Look for that same break of structure, right? On the 4-hour time frame, let's actually delete all this in the back so there's not too much noise going on. Boom. Boom. Now we're looking at this. How do we enter? Now we're in the zone, right? We had all those lines, all those structures on higher time frames. Now we're in the zone. What do I do? Now you look for more breaks of structure, right? Boom. Finally broke structure. Full body candle, retested. We took those buys in the chat, in the Discord. Easy play. Textbook. Price flew 1,500 points. Easy. And then we swept some liquidity, right? We swept the right liquidity. Even tapped in some of this in balance right there. And then sold off right back down to the same buy zone, the same break of structure. Price is allowed to retest as many times as it wants. And then finally took off for 2,000 points. 2,500, 2,600 points. Easy work. Easy work. And this is just the 4-hour time frame. You know, you could have marked up more structure here, right? If you missed these entries, you could have, okay, well, we broke this structure, right? Full body candle, retest, gone. You could have went down to even smaller time frames, right? Boom, broke above, retest, gone. Easy work. And that's just NAS. We also cooked on gold. So it is what it is. Thanks for tuning in. Thanks for coming to the TED Talk. Let's get it.